Simple trading strategies, unlocking crypto gains. Welcome to the world of trading, where opportunities abound, especially in the ever-evolving cryptocurrency market. Today, we're breaking down simple trading strategies to help you get started on your path to crypto gains. Whether you're a beginner intrigued by blockchain or someone eager to dive into trading, this is the video for you. We'll explore strategies, tools, and tips to help you build confidence and trade smarter in the crypto space. Buckle up, folks. It's going to be an engaging ride. Let's start with the foundation. What is cryptocurrency? At its core, cryptocurrency is digital money built on blockchain technology. Though terms like Bitcoin and Ethereum might sound complex, they're just digital assets that can be bought, sold, or traded. Crypto trading involves leveraging the fluctuations in price movements to profit. Unlike investing, where you buy and hold for long-term gains, trading focuses on quick, tactical decisions. Now there are different styles of trading. Day traders execute trades within a single day to capitalize on short-term volatility. Swing traders hold assets for days or weeks to ride trends. HODLers invest long-term, holding through ups and downs. Recognizing your trading style is the first important step, and remember, this is a risky but highly rewarding space. Imagine diving into the crypto market without a clear plan. It's like venturing into a forest without a map, exciting but perilous. Trading strategies help you stay consistent, make logical decisions, and gain clarity amid market chaos. Strategies don't just reduce risk, they minimize impulsive, emotion-driven decisions. The crypto market, with its wild fluctuations, thrives on volatility. Having a plan ensures you maintain confidence even during downturns. Let's prepare you with tools to navigate this exciting landscape. Before we jump into strategies, you need the right setup. First thing first, where will you trade? Select an exchange that's secure, beginner-friendly, and offers the coins you're interested in. Popular platforms such as Binance, Coinbase, and KuCoin are trusted by millions. Look for user-friendly interfaces and low trading fees. Your crypto wallet is a key tool, literally. Wallets store your digital assets securely. You can choose between hot wallets, connected to the internet and convenient but less secure. Cold wallets, completely offline and perfect for long-term safety. Remember, crypto wallets are your shield against hacking risks. Once your wallet and exchange accounts are set up, decide how much you're willing to trade. Never invest what you can't afford to lose. Assess your risk appetite and start small. Crypto trading is a marathon, not a sprint. Every successful trader relies on powerful tools. Without them, it's like driving a car without a dashboard. Platforms like TradingView provide real-time market analysis. They allow you to study candlestick charts, which visualize trends and provide insights into buying or selling opportunities. Candlestick charts might seem overwhelming at first, but they reveal critical information about price highs, lows, and closing points during a specific period. These are the pulse of the market, and learning them can elevate your decision-making. Crypto is global, running 24/7. Use news alert apps like CoinDesk or Cointelegraph to stay updated on what's powering price movements, whether it's breaking technology updates or market regulations. Now let's get into the heart of the video, trading strategies you can immediately apply. Remember, the goal here is simplicity. Sometimes, the simplest strategies are the most effective. With the HODL strategy, you buy cryptocurrency and hold on to it, even during market dips. The philosophy is simple. You believe in the long-term growth of crypto and ride through short-term fluctuations. This is especially effective for coins like Bitcoin or Ethereum with steady historical growth. Keep in mind, however, that patience is key. The DCA strategy is perfect for beginners uncertain about timing the market. Here's how it works. You invest small amounts regularly, say weekly or monthly, regardless of price. By doing this, you average out your purchase cost over time and reduce the impact of market volatility. DCA works wonders for volatile assets like crypto. It's hands-off, systematic, and beginner-friendly. Market trends are like waves. Follow them, and the ride is smoother. Use tools like moving averages to identify uptrends and downtrends. Buy during uptrends and exit before downturns lock in profits. Not every trend is your friend. Be quick to adjust when the tides change. Markets often form clear support and resistance levels. When the price breaks above resistance or below support, it signals a bigger trend is coming. Catching this movement early can lead to huge profits. Remember to confirm breakouts with increased trading volume to avoid false signals. When the market struggles to break above resistance but refuses to drop below support, it enters a sideways or range-bound market. Skilled traders buy at the support level and sell at the resistance level, capitalizing on price bounces. These strategies are effective, but discipline and research will perfect your execution. If crypto trading is an adventure, risk management is your safety net. Without it, you could easily lose everything. Subconsciously, many traders hold losing trades, hoping prices will recover. Don't fall into this trap. Use stop-loss orders to automatically sell when prices drop beyond a certain level. Similarly, place take-profit points to secure gains once targets are met. Bitcoin isn't the only player. Diversifying your investments across multiple coins reduces your risk. Balance high-risk options with established crypto assets. The fear of missing out is real. When the market surges, emotions kick in, tempting you to buy at an inflated price. Calmness during market highs and discipline during lows build successful traders. Trading with borrowed funds, also known as leverage, amplifies your profits, but also your losses. As a beginner, avoid over-leveraging. Stick to manageable risks. Here's a golden rule. Always understand what drives the market you're trading in. Unlike traditional markets, crypto prices are influenced by unique factors. Supply and demand, basic economics, limited supply and high demand drive prices. Utility, coins like Ethereum with use cases grow in value over time. News and global sentiment, announcements on regulations, partnerships, or security breaches impact prices. Crypto markets run in cycles. A bull market signals growth, prices rise consistently. A bear market, on the other hand, causes prolonged downturns. Mastering these market cycles can help you adapt your strategies effectively. Even the most seasoned traders make mistakes. The difference is they learn from them. Here are some common mistakes and how to avoid them. Trading too frequently leads to exhaustion and bigger losses. Focus on quality over quantity. Without a predefined strategy, traders get stuck in uncertainty. Always set your targets before entering trades. Avoid taking advice from every influencer or hype-filled tweet. Instead, do your own research. Dyer, always. Imagine buying a coin just because it's trending, only to watch it sink. Thorough research can help you dodge scams and unreliable projects. Let me leave you with this. Crypto trading isn't about quick riches. It's about learning, adapting, and growing over time. Start with a single strategy like dollar cost averaging or HODL and build your skills. It's a journey, not a race. Take small steps, experiment with tools, and develop the confidence to evolve into a smarter, savvier trader. If this video helped clarify crypto strategies for you, like, subscribe, and share it with your friends. Your journey starts here, so why wait? Dive into the crypto space today and make the most of its incredible opportunities. The market is waiting. Will you take the first step? See you in the comments.